Welcome back to our tutorial video about MACD part 2. You know, this is pretty exciting stuff. An indicator that actually has some predictive qualities. As we discussed, most indicators, technical indicators, are lagging indicators, especially moving averages. In other words, they take too long before they give you the signal to act. They signal the move after the move has already commenced. MACD produces some lagging signals as well, but it also has some forecasting capabilities. MACD produces signals from three sources. The MACD signal line crossovers are the most common signal that MACD sends out, and unfortunately they're the most unreliable. Also, unfortunately, they're the ones that most traders are aware of and actually take action on. But I'm here to tell you that there are some other signals that MACD sends out that are more reliable, and although they're less frequent, they produce bigger moves. As we discussed in the previous video, MACD centerline crossovers are really the equivalent of the 12 EMA crossing the 26 EMA. Yes, they are lagging, but they are fairly reliable for longer term moves. The most powerful, in my opinion, signal that MACD produces is the divergence. The divergence that MACD has with price, although, again, it's the least frequent signal that MACD sends out, it is the most powerful, produces the biggest moves, and is also the most reliable signal. So let's review. Moving average crossovers, or MACD crossing the signal line crossovers, as we mentioned earlier, are the most common signal. Here is a bullish MACD crossing the signal line, sometimes known as the trigger line. And as you can see in this example, it was a very successful signal in that the price moved bullishly up after the signal was initiated. And here is a bearish MACD crossing the signal line. It too proved to be a very good signal and very timely as well. Remember that I mentioned that the moving average crossing the signal line, the MACD crossing the signal line signal is the most common. Although this example shows it as very successful, it many times will be a false signal causing whipsaw type action. The redeeming saving grace of this signal is that it can also be used to confirm what I mentioned is the most reliable signal, and that was the divergence. And I will talk about that when we get to the divergences. This chart shows a good example of the bullish center line crossover. This is where the MACD line is below the center line, also known as the zero line, and as it crosses over, it goes into what we would consider bullish territory. So this, in and of itself, is a long signal. MACD crossing the zero line to the upside. Of course, once MACD turns and rolls over, crosses the zero line, to the negative side, then a centerline crossover in that case, of course, would be considered a bearish signal. Let's not forget that the MACD, as it crosses the zero line, is representative of the 12, and they're no longer plotted here on the chart, but the 12 EMA crossing the 26 EMA to the upside. And the opposite would be true on the top side. The 12 EMA crossing down over the 26 EMA would be represented by the MACD crossing through the zero line to the bearish side. Though the centerline crossovers have been proven to be very much a lagging signal, they have also proven to be fairly reliable for longer term moves. Now the one we've been waiting for, the divergence. This, although the least frequent signal that MACD generates, it is, in my opinion, the most powerful and most reliable. To refresh your memory, as price is coming down, price is making lower lows, as we see in the descending support line. But MACD is making higher lows, diverging with the actual price. This is an example of where that final moving average or MACD crossover over the signal line confirms the divergence. So it's not so much the signal line being crossed here that is the signal, but it's the signal line being crossed is the confirmation that a divergence has occurred. And then, of course, followed up by the lagging indicator of the actual moving averages crossing over, represented here by the MACD crossing through the zero line, is the confirmation and a confluence or congruence of all the signals working together, indicating a bullish move is underway. Here's another chart and another example of a divergence. In this case, that is a bearish divergence. Here we have a strong uptrend designated by this ascending support line drawn in blue. As price is making higher highs, MACD made some lower highs. The confirmation of the MACD is MACD for a second time right here, crossing through the signal line at a lower level than the previous level. At the same time, again, when price was diverging, this is a clear sign that the momentum in this uptrend is weakening. The confirmation, of course, is when price breaks through the strong uptrend line and trades below it for several days. If you need further confirmation, this horizontal support line is then broken, leading and paving the way for a subsequent down move. In part 3, we will combine all the signals of the MACD, and we will add the powerful forecasting abilities of the MACD histogram.
If there's one thing in my life that's missing, it's the time that I spend alone, sailing on the cool and bright